Yo, the stock market got absolutely torched today. And I'm not talking about when you and your cousin take a break during Thanksgiving to go on your little walk. I'm talking about our favorite tickers getting yeeted into the fiery depths of hell. In this video, I'm going to be breaking down everything going on that you need to be paying attention to, and I also really want to explain why my personal prediction is that there is more pain to come. I hope you are buckled up because it's going to be a big one, and man oh man do we have so much to talk about. If you enjoyed these type of market breakdowns, don't forget to like, don't forget to subscribe, and hey, if you want to leave a comment below, it really does help me out with the algorithm to get this video presented in front of more people who might care, who might need a little bit of help with the crazy market times ahead. So with that being said, let's rock. By the time the world's largest casino officially closed on the day, the headline is not what you want to hear. Dow tumbles nearly 900 points, Nasdaq suffers worst day since 2022 as recession fears erupt. I was not kidding when I said that the market got torched. Look at all that red. Absolute carnage, and it wasn't just the equities market. Bitcoin sinks to a 4-month low amid concerns over the US economy, and if you look at the records we're breaking, it is not stopping there, and we're breaking even worse ones. Nasdaq 100 heads for the worst day since 2022 as $1 trillion was zapped away. A trilly, not a milli, not a billy, a trilly gone just like that. And as I alluded to, some of our favorites got absolutely murked. Nvidia down 30% from high as tech-led sell-off hits the Magnificent Seven. Tesla shares plunged 15%, suffering the steepest drop in 5 years. And since its high, it is now down officially 50%, getting cut in half. So now that you have a better grasp of how bad the devastation actually was, let's talk about what's going on. Because if you look at the SPY today, it was horrible, but even going into the weekend, right here, let's pretend today didn't happen. Everyone and their brother was telling you to buy the dip. They saw a recent low, they saw we wicked below it, they were talking a lot about the 200-day moving average. Everyone and their grandma was saying, buy this dip. And yet, they were wrong. And this is going to be that moment that I do a little bit of a I told you so, because in my past couple of videos, urgent, don't buy, what I was seeing in MicroStrategy and Palantir that never came to fruition. Well, that was just a personal horrible trading day for me. But most recently, the perfect dip buy in the most recent update video, 100% free to all of you. I explained exactly what was going on in the options market that said, no, this is not the time to buy. Not only did I call it out, I put my money where my mouth is. And today, my one-day return right here, $83,000. In one day, I made way more than I used to make in an entire year of working. What? 2,000 hours, and in one day I was able to eclipse it. And obviously I'm on quite the heater because year to date up 164, past 3 months 200, just crushing it. Now, as a very quick side note, if you want these call outs in real time and the reasoning and how I'm managing it, that's exactly what the Discord is free, and you can join up with the Goonie Trading Discord, like I said, for free. Just make sure to use that promo code Goonie. It's in the description below. Like I said, first month 100% free. I put my money where my mouth is. It's the perfect opportunity for you to test drive it. You see all my trades, my reasoning, my updates, the Piper signal, private videos, access to the voice chat. You get access to everything for free. And the reason I do that is because I think you're really going to like it. So make sure to use that promo code Goonie, and that's how you can see all of my stuff in real time. Alrighty, back to the markets. The bloodbath of a situation. Like I said, the SPY getting hit, down 2.7%. The Nasdaq even worse, down almost 3.9%. You have volatility ripping through the roof, and crypto clearly taking a hit, down about 2.2%, but it is trading below 80,000. So what in the world is going on? Trump says a transition period for the economy is likely. You can't really watch the stock market. With fears brewing over tariffs and jobs, President Donald Trump and his top lieutenants are acknowledging there could be some short-term pain for the economy and markets before it gets better. Basically, the people who are understanding how all this political talk works, they're basically telegraphing to all of us, yeah, expect pain. What I have to do is build a strong country. You can't really watch the stock market. Now, I know he's saying that. It's a good thing to say, but we also all know that he's obsessed with watching the stock market. Things got really bad today when this started popping off. Trump rejects pleas for business for more clarity on tariffs. They always say that. President Donald Trump has shrugged off appeals from the business community for greater clarity on tariffs, saying they already have plenty. Trump's tariffs and broader strength of the U.S. economy are front and center this week as a slew of new economic data is released. And also on top of that, we got movement from the Fed. Federal Reserve Chairman Jerome Powell says the U.S. Central Bank is well positioned to wait for greater clarity on the Trump's policies. Just a really quick aside here of what are the big events you got to pay attention to for the remainder of this week. Tomorrow, Tuesday, March 11th, we have the JOLTS job openings at 10 a.m. On Wednesday, March 12th, we have a big inflation report, the Consumer Price Index. And then on Thursday, we have the Producer Price Index. So basically, we get an idea of the strength of the economy, followed by an inflation report, followed by an inflation report. What does this all add up to? This all adds up to uncertainty. The market hates uncertainty. We're all here just kind of on our heels, playing the defensive as we're trying to understand, is the tariff situation going to subside or is it going to get worse? And whenever there's uncertainty in the market, it absolutely hates it. So with that being said, though, of a lot of uncertainty and we're starting to crack these lows as I showed before, but yet everyone was telling you to buy. Well, how do we know legitimately that this is not a good buy opportunity? Well, it comes back to actually studying the options market. Right here, you can see this from Spot Gamma. We can see where the calls are positioned. We can see where the puts are positioned. Day over day, we could track the difference and see, are they getting more aggressive on calls, more aggressive on puts? And over the past couple of weeks, it's just been more and more puts. The 0DT, the weekly, and the all expiration. On all three of those time frames, this is a put dominated situation. For that to change, the puts need to close out, the calls need to be open, and then maybe we get the rally. It could be a gamma rally, a Vanna rally, whatever it is, but you need to see a legitimate difference. So right now, the fact that we are put dominated in a negative gamma situation, something needs to change. Obviously, that's with respect to the S&P 500. Another thing suggesting that we're not going to get an immediate bounce is the exact opposite. If you look at what's going on in volatility, remember VIX is the volatility measure of the S&P 500, completely dominated by calls. So the overall market completely dominated by puts, the volatility of the overall market completely dominated by calls. There's no breathing room. So whether you want to completely tie it to Trump or China or Canada or Mexico or whatever your grandma said to you at that Thanksgiving that made you start going for walks with your cousin so you can handle it better, whatever it is, we can really just distill all this down to exactly what's going on in the market. Track the big money. Track what's going on. So I get that everyone is telling you to buy the dip just because they saw a little bit of green, which is referred to as recency bias and anchoring, and they're like, it's the 200-day and maybe the seasonality is going to pick up, and we got crushed anyway. Don't listen to those people. They don't know what they're talking about it, because in the videos, I've been giving you the exact proof saying, no, this is very obviously bearishly dominated. Another way to say that is right here. You can see the white line, which is the price of the S&P 500, and then the delta flow, as in the calls and puts being bought and sold and whatever managed throughout the day. You can see the delta kept getting absolutely destroyed, not only in the S&P 500 and the Mag 7. So yes, we can look at the news and we can do our best to say, is the news bullish, is it bearish? But what matters is actually the price movement, and we're here trying to predict the next price movement, as in we have to look at some of the leading indicators to get an idea of where this might go. And the best leading indicator you're really going to have is to be able to track options, know where there's support, know where there's resistance. Shameless plug, every Monday to Friday, 9 to 11, I have a live trading show. If you're watching this, it's free. Stop by every single day before the market opens. I give you the major levels of support and resistance, and you're more than welcome to ask any of the returning viewers in the comments below, but these levels have been spot on. How do I come up with them? Am I the luckiest trader of all? No, I just have a basic understanding of how to read the option chain. So right now, there is too much downward pressure of the bearish side puts with the overall market, and too much call pressure in volatility, which is inherently bearish for the overall market. But when does that all take a breather? I know that's what you're coming from. Not only do we see what's going on, but the date, the time, when can this bottom? Well, all that positioning, a huge chunk of the positioning gets removed at the March OPEX. We're not talking about this Friday, but next Friday, March the 21st, that's when the table somewhat resets and we have the opportunity to breathe from there. So what am I looking for? Basically anywhere from March the 21st all the way up until really the start of April, because that's when positive seasonality, bullish seasonality kicks in. That is what I am strongly looking for to be the dip buying situation. So I get it. I know that everyone's telling you to buy the dip just because we're down, but I'm telling you, I'm expecting a lot of choppiness. And the other thing I want to leave you with is, ever since this craziness started, I just want to point out that from Tuesday, February the 25th, red day, green day, red day, green day, red day. We did go back to back. Then we had a green day, red day, green day, red day. So expect that choppiness. overall, the trend is clearly down, but for my intraday traders, my scalp traders, yeah, we're having large ranges both to the upside and to the downside. So maybe there's a turnaround Tuesday tomorrow, and I'm still not going to be changing my thesis until I see a legitimate change in the option setup, the option structure. And as of now, it doesn't even look like we have a shot of that happening until the March OPEX. I want to be very clear about all of that. Once again, news aside, there's a tremendous amount of downside pressure. Expect volatility, expect downside pressure, and expect the first real shot of us having an opportunity to put in a true bottom somewhere between late March and early April. That's what I have for you. If you have any questions, comments, concerns, let me know in a comment below. I'll get back to as many of you as I possibly can. Of course, feel free to stop by in the next update video or even in the next stream, and you could ask your questions there. I could always help you out in the Discord if that's something that you're interested in. But right now, I get it. People are going to tell you to be doing these things because everyone's scared, they're emotional. But I want to remind you, this is not a doomsday call out. For retail traders, this is the time you can make the most money because you need big ranges and you need a lot of volatility to turn a little bit of money into a lot of money. So please don't be scared here. Just make sure you're following the actual trend and not just randomly firing from the hip. That's what I have for you. I appreciate your time. I appreciate the good vibes. I'll catch you in the next one.